So, if you're a SoFi investor, you're probably wondering, why does SoFi continue to increase their interest rates? And if you're a consumer who banks with SoFi or banks elsewhere, and you see this company called SoFi continuing to raise their interest rates on their savings and checking accounts, but your bank continues to pay you 0.01% on your savings and zero on your check-ins, you're wondering, why is it that SoFi can increase their interest rates from 1% to 2% to 2.25 to 2.5% all within a single year, but my bank hates me so much and refuses to increase their interest rates on my savings? Why do they not love me? Why does my bank hate me? Well, your bank might not hate you, so I'll concede that, but they don't care for you. See, SoFi, like any other bank, makes their money by accepting deposits. Again, SoFi is a national bank with a charter, and so they get to accept and hold onto deposits from their customers, the people who save their money at SoFi and hold their checking funds at SoFi. So SoFi takes in all that money, and what they can do then, due to fractional reserve banking, they can take 90% of that, 90%, 85%, whatever the case is on any given day. Let's just say 90%. They could take 90% of that money and then go lend it to investors, to business owners, people who want to start something, people who want to buy a house or just renovate their house or maybe go to school. SoFi can take all that money and credit cards and lend it out to people. And then SoFi collects interest. Of course, it's a little bit more complicated than that. Traditionally, they will collect the interest, they will hold their loans and get paid interest as you pay off your loan. And the more they can lend out, the more they get paid. But of course, SoFi doesn't actually hold all those loans because it's riskier than it's worth. So they sell those loans to other people, other investors who don't mind holding on to that loan. And then SoFi gets paid a fee in return. They get paid for servicing that loan, for producing that loan, right? So they're pretty much a wholesaler of loans. They get the customers in the door. They get millions and millions of customers. They have 4 million now of members. They get them in the door via savings and interest rates and other perks like investing, free investing, stocks and cryptos and car loans and discounts on loans. And they lure in more customers that those people, those investors, the magical investors in the background that you never see, don't want to deal with. They don't want to have to do marketing and talk to people and suck up to you. They're above that. And so they let SoFi go do all of that work. And SoFi does all of that by building a brand and being the name on the stadium where the Los Angeles Rams and the Chargers played in the Super Bowl and where that home team won and where WrestleMania is going to be and where the Olympics is going to be. And so SoFi is able to reach millions of people and get them in the door. And those people put their money to SoFi. And as it sits there in SoFi's vault, SoFi takes most of it and lends it out and gets paid very well on it. And so the more they can bring that in, more money they can bring in, and they're bringing in billions of dollars. Earlier this year, they're bringing in $1 billion every 3 months, I believe it was. They're bringing in billions and billions of dollars in deposits. And that means they can make billions and billions of dollars in loans, in mortgages, credit, debt. They can give that out and get paid in return. And SoFi might get 5% or 10% or 20% in return. Especially on credit cards, they get paid pretty well for that. And the more they can do this, as I said, the more they get paid. And so SoFi is incentivized to offer the best savings and checkings account with the most in interest to their customers, to people who save their money at their bank. It's a very simple equation. SoFi offers incentives to consumers to save their money into SoFi, and SoFi takes that money and gives it to investors and business owners and anyone who wants to start something or go to school or buy a house or renovate. And then they take that loan and sell it to the magical people who you never see, who hold that loan, pay SoFi for servicing it and for actually producing that loan. And SoFi grows. They grow and they grow and they bring in millions and millions of more customers and then repeat the cycle. That's it. And so there's other banks out there, other online banks who try to compete with SoFi, and they might increase their interest rates to 2%, and then SoFi sits down and says, "Oh, you're trying to play this game. We're at 2.25 now. Try to compete with us. We're vertically integrated. We own the entire stack. We own Galileo. You have to go through us in order to offer your banking services to your customers." And so even if you bring in more customers, you're paying us, SoFi, more money. But we don't have to pay anyone because we built the technology in-house. That's exactly why we acquired Galileo for $1 billion in 2021. And why we acquired Technisys this year. We don't have partnership cost because we own the tech. And the competitors have to pay us. With all the hot dog stands, we have our own hot dog stand, but we also run the factory. You own the factory that produces the hot dogs. And so in either way, any way you slice it, we, SoFi, get paid. It's really that simple. That's why I love SoFi. That's why it's my biggest investment. And that's why I love it as a customer. Because I get discounts on my loans for direct depositing into SoFi. I get my paycheck 2 days early. It's dumb simple. And I get the highest interest rate in the industry at 2.5%. Why wouldn't I bank with SoFi? And that's the exact thing that millions of people who are going to discover SoFi over the next few years are going to be asking themselves. When we get to 5 million customers, there'll be even more people who say, "Oh, I know someone using SoFi. I should check them out. Oh, they give 2.5% in interest on savings and checking? My bank gives me 0.01% in savings? Why have I not switched? Why do I keep getting screwed?" And they'll switch. And they'll tell their friends about it. And their friends will tell their friends about it. And then all before you know it, we're at 10 million members. And then SoFi continues to do it over again. Repeat. Gives out more loans to business entrepreneurs and people who want to go to school or renovate their house or even just start a hobby. Go on a trip, vacation, Disney World. Invest in the children's college fund. Whatever the case, SoFi will be there for their customers. And they have very trustworthy members. Their members have the highest credit scores in the industry. The people borrowing their personal loans. And so these personal loans, although they're risky for SoFi, their customer base, the ones who are borrowing these personal loans, will likely pay it back. And so as SoFi grows, it brings in more members, more high earners not well served by their banks. As SoFi brings them into our fold, into SoFi's ecosystem, SoFi gets paid more, SoFi gives out more loans, and their loans are more secure because of the quality of their customers. So that's why SoFi continues to raise their interest rates. It's really, really simple. And I hope you're enjoying it if you're a customer of SoFi or you're an investor. I'm both, and I love it. That's all for now. I hope this was helpful and I hope you enjoyed it. If you did, consider liking and subscribing. Thank you, and I'll see you again next time.